Welcome back to Cryfonex. The crypto world never sleeps, and neither do the headlines. From Michael Saylor's firm, Strategy is in a tough spot, to Argentina cracking down on Memecoin fraud, today news are nothing short of explosive. We're bringing you the biggest developments you can't afford to miss. Let's dive in. Michael Saylor's firm, Strategy, is in a tough spot. With nearly all of its $8 billion in assets tied to Bitcoin, falling prices are raising alarms. A recent filing revealed the company may be forced to sell some of its 185 BTC holdings to meet debt obligations, especially if it can't raise new capital soon. Strategy expects a $6 billion unrealized loss for Q1 2025, despite a $169 billion tax benefit. To cope, it's planning to raise $210 billion via perpetual preferred stock, offering an 8% dividend. Still, its future heavily hinges on Bitcoin's performance. While the price hovers around $76,000, BitMEX founder Arthur Hayes believes Bitcoin could hit $110,000 if central banks ease monetary policies. But for now, Saylor's big Bitcoin bet faces real financial pressure. Cboe BZX has submitted a proposal to list the first ever SUI ETF, the Canary SUI ETF, directly linked to the Sui Network's native token. If approved, this would give U.S. investors regulated access to SUI through a spot fund, which may also stake tokens for additional yield. Though SUI's price briefly surged past $2, it has since dipped to $1.94. The move is part of a wider trend. Canary Capital has also filed for ETFs tied to Solana, XRP, and even a hybrid ETF mixing NFTs with the Pudgy Penguins ecosystem. With Trump back in office, altcoin ETFs have flooded the SEC's desk, including filings for meme coins like Dogecoin. Whether SUI gets the green light could set the tone for future ETF approvals in the U.S. In Argentina, lawmakers have launched an official inquiry into the LIBRA Memecoin scandal, which wiped out over $280 million in value from nearly 75,000 traders. The token surged 3,000% after President Javier Milei promoted it on X, only to crash 90% hours later. Lawmakers are demanding answers and have summoned top government officials for questioning. Investigations suggest that insiders may have manipulated liquidity, pocketing over $110 million in profits. Lawsuits are piling up, including a U.S.-based class action. The fallout is political as well. Critics claim this scandal undercuts Milei's anti-corruption stance just months before midterm elections. Bitget is preparing to burn over 30 million BGB tokens, worth $120 million, in its Q1 2025 update. Unlike traditional burns, this one uses an on-chain utility-based model that ties the burn volume to actual gas fee usage. The move follows a massive 800 million BGB burn earlier this year and aims to create transparent, sustainable tokenomics. At the time of writing, BGB trades at $4.07, down slightly from the previous day, but the long-term play here is clear. Bitget wants BGB's value to reflect real usage, not just market hype. World Liberty Financial, a Trump-affiliated crypto firm, just sold 5,471 ETH for around $8 million at a price of $1,465, well below its purchase average of $3,259. The firm now sits on an estimated $125 million in unrealized losses. Despite the red ink, WLFI continues to expand, recently launching USD1, a stablecoin backed by short-term U.S. treasuries. Yet critics remain skeptical, especially after the Trump family acquired 60% of the platform, securing rights to 75% of token sale revenue. As political influence grows, so do concerns about governance and transparency. From massive token burns to ETF revolutions and political scandals, this week proves that crypto is more than just code. It's power, politics, and billion-dollar decisions. Which of these news do you think will make the biggest impact in the coming weeks? Drop your thoughts in the comments, and don't forget to like, subscribe, and hit the bell so you never miss a beat in Cryfonex.